The McAlvany Weekly Commentary, covering monetary, economic, and geopolitical news events. Now here are Kevin Orrick and David McAlvany.
Welcome to the McAlvany Weekly Commentary. I'm Kevin Orrick along with David McAlvany, and today we have Bert Dohman with us from the Wellington Letter. David, we've seen some amazing rallies in this bear market, the supposed bear market in the stock market. 6 times in this bear market time, we have had 300 points or greater rallies in the stock market. Now, is that counter trend or is that signaling something else?
To be honest, Kevin, I think there's Wall Street firms that keep individuals scuttled away in the dungeons of their labyrinthine plazas. And these are people like Stephen Roach and David Rosenberg and others who are chief economists of one sort or another. In fact, Rosenberg is the North American economist for Merrill Lynch. And they drag them out on occasion just to say, see, we told you so. He commented specifically on that. He says, we're in a very confusing atmosphere. People don't really know what to make of a 300-point rally in the Dow the other day. But my main message was that 300-point rallies from the Dow don't happen in bull markets. In fact, they never happened in the bull market from October of 2002 to October of 2007. But it has happened 6 times in this bear market and 12 times in the last bear market. You don't get moves like that in bull markets. As Richard Bernstein has said time and time again, this is the hallmark of a recession and a hallmark of a bear market. So what you have is, this is the end quote, what you have, Kevin, is a counter-trend move. What you have is a declining fundamental environment where the stock market is under terrible pressure, and it's continuing to devalue both in terms of dollars and particularly in terms of gold, a 73% devaluation thus far since 2001. But you have these violent counter-trend moves where, boom, it's up. And the same thing can be said if you're looking at the gold market. We've been in a sustained bull market for 7 years now, and you have these violent counter-trend moves. Boom, and it drops in price. And that doesn't happen in the other kind of market. These major volatile swings are counter-trend.
In fact, they're one of the best ways to find out the actual direction of the market is the severe drop or the severe gain is opposite to what the actual long-term trend is.
That's right, Kevin.
Yeah.
A couple of things to note that I think are very important. You look at the IMF chief economist, Kenneth Rogoff, has recently commented that he's looking for a major bank to fail in the next few months as the world's biggest economy hits further troubles. And frankly, Kevin, what's interesting is he says, who cares about the mid-sized banks? He says, we're not just going to see mid-sized banks go under in the next few months. We're going to see a whopper. He says, we're going to see a big one of the big investment banks, or big banks, says Rogoff, who is now an economics professor at Harvard University and was the International Monetary Fund's chief economist from 2001 to 2004. Last week, 2 weeks ago, maybe 3 weeks ago, we talked about Washington Mutual, certainly on a short list of banks that are very troubled. We actually had Wachovia close down one of their funds this last week, close down a division and take a $2 billion loss on that. So is it Wachovia? Is it Washington Mutual? To be honest, Kevin, it doesn't even really matter, but one of the big ones, much bigger than IndyMac. So this will put it as either the biggest bank failure in U.S. history or the number 2 behind Continental Illinois, and that, in his view, is imminent.
And as we know, David, I mean, the FDIC doesn't have enough to bail out, but just a few banks, just a small handful. So is this another sign of just more bailout from the Treasury, from the Federal Reserve, something in that nature?
Correct. You look at the capital available, whether it's the FDIC, whether it's the Feds and the Treasury combining their efforts, and eventually you run through what money you had. The Fed has already gone through $400 billion. They have about $900 billion on their balance sheet. When they expend all their capital, when they've loaned it all out and turned short-term fixed loans or bridge loans, if you will, into permanent loans, that's when I think you begin to see a strong reflationary trend, when you see inflation hit its next gear and start to really move quickly, because they're now not spending money that they had on account. They're creating money and spending it simultaneously.
One of the experts that we have read for years is actually our guest today on reflation and deflation, and he's been writing about this for well over 30 years. So I'm looking forward to seeing Bert Dohman on the program. Bert, there are some key questions on people's minds right now. What would you say are the most important?
Well, I think it's always good to address the questions that are on people's minds. For example, if you take CNBC, all these guys continuously come on the air, all these analysts that they invite on, and they're always talking about bargain hunting. They've been talking for 12 months about buying up all these wonderful bargains. And, and every one of them then continues to go down. So I think, first of all, the one big question is, are we in a recession? Okay, to these people that you see in the media, they say, no, we're not in a recession. Okay, so I think that's one important question. Number two, are we in a bear market? On CNBC, if you watch, they have this ridiculous number of 20%, and early in the morning, we're in a bear market. Half an hour later, the market has rallied a little bit. They say we're no longer in a bear market. By the end of the day, we're back in a bear market. I mean, it's absolutely ridiculous. Another question on people's minds, how far is this going to go? When is the housing market going to bottom, right?
Correct.
So that's one of the very important questions. Right now, of course, you've got the gold question, right?
Mm-hmm.
Is it time to buy gold at these prices? What should a person think is going to happen? What I prefer to do, instead of saying, what a person should do, is just saying what the market. I like to orient my advice based on a market, I think, instead of saying first people should now buy or sell this. You see what I mean?
Basically, what is the market saying about this? Why don't you dive right in, Bert? What is your opinion on the recession? The recession, I'm stating it as if it's a fact, and obviously there's controversy. The NBER has yet to announce. Of course, they're kind of a lagging indicator. They usually announce a month or two before it's over. But are we in a recession? What's the evidence for that, and what does that really mean?
Yes, late last year, we declared in the Wellington letter the recession has started. And the recession did start at that point. People have to recognize how GDP numbers are calculated. The government takes nominal GDP growth, then deducts the rate of inflation from that in order to get the headline GDP, which is what you see in the news. Well, obviously, if you deduct a smaller number for inflation from nominal GDP, then you get a higher number for the headline GDP. So in other words, if the government can keep the inflation numbers lower than they really are, then you get a better economic growth number.
You're overstating GDP in essence.
Yes, and there are well-known economists who have calculated inflation based on how it was calculated in 1980. There's another number of how it was calculated in 1992. And, for example, if you calculate inflation right now as in 1980, we're at 12.6% inflation. Mm-hmm. If you calculated the way it was done in 1992, then we're at around, I think, 8.8% inflation. Well, you deduct that from nominal GDP growth, let's say it's around 4%, then suddenly you're at negative 4 or 5% GDP growth. So we are in a strong recession already, except that the numbers are fudged. They're cooking the books in Washington, as always, and therefore the recession is not being recognized. If we look at Europe, Europe is supposed to be stronger, or was supposed to be stronger than the U.S. economy. Well, in Europe, they're in a recession already. Japan is just now going into recession. Last quarter, GDP growth was down 2.5%. So these are countries that don't fudge the numbers as much as we do. And so they are already recognizing their own recessions. So that's really where we are. This recession started late last year, and it's go much deeper because people don't even recognize it yet. And once people start losing their jobs, then, of course, you are going to see retail sales and everything else fall off the cliff.
Does that naturally take us into the next question then, Bert? Are we or are we not in a bear market in the stock market right now?
Oh, obviously. The bear market started in October, and, we gave a sell signal in the middle of April that was the first top, and that plunged into August. Then a rally in October, in the middle of October, right at the top. The headline of the Wellington letter was, the front page headline was, Rally Top, and we said, this is it. This is the end of the 5-year bull market.